Welcome to the B.F. Anderson Technical Report for December the 16th. I refer to this as a technical report, and there are several types of technical analysis, one of which is called trend following, and the other one would be pattern identification. So you're looking for historic patterns that seem to generate certain results. However, trend following is what I want to really talk about today. So if we take the 10-year Treasury note, which by the way is a very important yield to keep an eye on, and as I look at it this morning, we're approaching 2.6%. Now back here in 2008, we were up around 5%. So let's understand the trend of what interest rates have been doing. Now, trend following is where you're looking for a high, and then you can see here that you had a lower high, then you had a lower low, then you had a lower high, a lower low, then a lower high, then a lower low, and lower high. You see the point. Now on here also is the 200-day moving average of the price of the actual rate for the 10-year note. Now the two, you can see here where the 200-day turned down, tried to come up, did not make a new high, again came down, and so this is definitely a downtrend in interest rates. Now when interest rates are going down, it's indicative of a deflationary environment. So we've been going down on rates since 2008, and as a result, certain types of investments have done extremely well, which would be bonds, defensive type things, gold, consumer staples, things like toothpaste and soap and tobacco and things like that. So basically what we are in here is a deflationary environment, a very bad thing as far as I'm concerned. So rates hit a low back down here, and this would be 2012. And you can see we started to try to reverse the trend. Then the 200-day turned up, trend reversed, and we got an up move in interest rates, but they peaked out at 2.93%, and the economy turned back down again. I mean, I have theories on this, but we know that rates hit really a record low in July, which was just, before the election. The economy's in the tank. Things are not looking good. GDP growth rate is anemic at best. But something's starting to happen here. Now, this is a very meaningful move here, similar to the move that we got back here in 2013, which by all measures was a very good year for the stock market. So we've broken out of a consolidation box. We got up to 2.6%, and at the same time we've got the 200-day turning up. So the question here is this a reversal of trend, and are we going from deflationary worries to now we're going to from deflation to inflation? Now, I don't think inflation right now is particularly bad. I think it might be a good thing, in fact, because when you're going from deflation to inflation, well, it just means the economy is getting better. Now, speaking of inflation, let's look at the price of oil here for a minute. Again, this is a different graph. This is where we're using two moving averages, 25-week and the 50-week. This is a weekly price on the price of oil. Now, you can see here that when a moving average crosses below another moving average, which would be the 25-week crossing below the 50-week, that looks to me to be somewhat of a reversal of trend. So when we were telling people back in 2014 that we really thought you should avoid oil stocks and oil in general, and in fact I ran into a friend of mine who had a portfolio loaded with oil stocks. He asked me what I thought, and I said, run, don't walk, And sure enough, we get this collapse in the price of oil. I mean, it just really collapses. And you can see the trend. The trend continues to stay down. You've got both moving averages moving down, the price moving down, price below the moving averages, the 25-week below the 50-week, and so forth and so on. But here recently, now I'm talking about this summer, around July, we saw what we call a golden cross. Now this is called a death cross, all right? This is called the golden cross. So we've gotten a golden cross move here in energy, which I think possibly means that oil prices may start to trend higher. It looks like to me we might be looking at a reversal of trend. Now, I have talked to some people in the oil business, and basically they're saying that $70 oil next year would not be out of the cards. Now, another area that is interesting right now is the small cap stocks. Now let's take a real quick minute here and talk about a very key component. Market capitalization is one of the most important numbers that you can look at when making an investment in the stock market. It's number of shares outstanding times price. So when you start thinking about it, you go, okay, I'm going to buy this $600 billion company, which would be Apple Computer. And I want to double my money in the stock, because I really think that's got to be your attitude, is I've got to look at something that I think can potentially double. Well, a $600 billion company going to $1.2 trillion has just never happened before. And I would just say the odds are somewhat kind of stacked against you. Whereas when you're looking at small cap situations, and we're talking about companies that are $5 billion and less, and I'm going to show you two examples of that. If you got a $5 billion company, can it grow to a point where, it can go to $10 billion? Well, happens all the time. So it's important. You have to realize that 85% of the volume on the exchanges out there is led by institutional investors, mutual funds, pension plans, large endowments, things like that. So they, because of liquidity risk, and that's a subject for another day, because of liquidity risk, they cannot really get involved in small caps aggressively. And so if you find a good small cap investment and the institutions are coming into it, it's really could turn out to be a wonderful situation for you. So if you look here, this is the Russell 2000 Small Cap Index. Consolidation period, this has been really brutal. And then we had a bear market. Small caps dropped 27% at the beginning of this year. So this was not a good year in the beginning for small caps. But now we're getting the recovery. Now they're breaking out. I've got the 10-week moving average here. You can see it's turning up, and we're breaking out, basically making new highs on the Russell. This is very important. Now here's another index that's kind of in the same ball game. This is the NASDAQ 100 index. Now since when the election hit, everything broke out and went up. This lagged. Now this is the top 100 NASDAQ companies. This would be things like Facebook and Amazon and Netflix and the FANG stocks, as well as Microsoft and so forth. You can see again, we had a long consolidation period, bad drop here in November. But then, since then, we have broken out. I'll show you an example of a NASDAQ 100 here in a minute. Now, let's talk about a small cap. This is a company called Callon Petroleum. They're out of Mississippi. They're out of Natchez, Mississippi. Fred Callon is the CEO. They just announced 2 days ago that they're making a $650 million acquisition in the Permian Basin, which is called the Delaware Basin, which is in west Texas, almost to the New Mexico border. There was a discovery by Apache about a year ago where it extended the Permian Basin field towards New Mexico. Now, this could be a really big deal for this company. The stocks has been volatile in here, but this is an example of a small cap. This is a $2 billion company that is broken out and is in an uptrend, moving average turning up. There is risk in this, but just be aware that there are small cap companies out there that you should be looking at. Now, here's an example of just to show you what's going on with the market right now. This is Dow Chemical. Really breaking out, moving higher. So the industrial type names are really working right now. Now here is a NASDAQ 100 stock, Netflix. Now we all know about Netflix. They have cheap movies, cheap entertainment. But I tell you one thing that this company is doing that is really interesting. They're going to spend $6 billion, and I'll repeat, $6 billion on new movie content next year. Now, I don't know if y'all have seen this particular movie, one of their original movies called The Crown. But we watched it the other night, and it's really one of the best things I have seen in a long time. Very well done, great acting, great story, no cuss words, no sex, no violence. It was just a nice show. You can see, though, that Netflix went through a corrective process and is now kind of firmed up. If we get a breakout above 130, I think that's going to be a very positive sign. Now, here's another example of a small cap stock. This is a company called XPO Logistics, which is in the logistics business, which is trucking, shipping, so forth. So if we're going to get economic recovery, and the interest rates moving up is kind of giving us that indication, this would be the kind of thing that you would want to own. Again, another small cap. Now, to put it in perspective now, this stock trades, 1 million, 2 million shares a day, so there is liquidity risk for the institutions, but they are starting to come into it. So in conclusion, what I'm trying to get across is that it really looks like interest rates moving up could be a sign that inflation is returning, but hopefully it won't accelerate too much. We'll have to see. If you have any questions, let me know.